And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon to be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. And if you've not yet done so, please subscribe to both the YouTube channel and to the podcast. So I'd like to speak to you today about if your US brokerage account is secure, if it's safe. We had a few months ago, a few banks that went under. Obviously, in the financial crisis, 2008, we had brokerage firms, we had banks that went bankrupt. A few days ago, pre-recording, Moody's came down and downgraded a bunch of banks. And I, whenever anything like this happens, I always get calls from clients asking, are our accounts safe? Valid question. So I'd like to speak a little bit about that, okay, to put people's mind at ease. So when you open up a U.S. brokerage account, you really want to make sure that the firm that you're with is members of the SIPC. The SIPC stands for the Securities Investor Protection Corporation, right, which protects customers if their brokerage firms fail. Okay, how does it work? I'm reading, and I encourage you all actually to go to their website, the SIPC.org website. There's all kinds of information, useful information there. And I think that it behooves investors to understand maybe more the advantages of a U.S. brokerage firm, right? And the insurance and the protections that you have in it, as opposed to accounts, I would say, in other places or other jurisdictions or other domiciles in the world where you don't have that kind of protection. You're sort of, we hope the government steps in and protects us, but it's not codified. If it happens, right, let's say your brokerage firm fails. If that happens, the SIPC protects the securities in cash in your brokerage account up to $500,000, up to $500,000. That $500,000 protection includes up to $250,000 protection for cash in your account to buy securities. So it's cash and securities. Again, I'm reading right now from the SIPC.org website, okay? How does it work? SIP protection is only available if your brokerage firm fails and the SIPC steps in. You must file a claim to receive protection from the SIPC. SIP's ability to satisfy your claim is limited by law. There are conditions, right? It's protected. Your account will be protected if your brokerage firm is an SIPC member. So it's really important when you're opening up a brokerage account to make sure that your firm is members of the SIPC. It also protects you if you have securities at your brokerage firm. You have cash at your brokerage firm to buy securities. But this is what's important. It doesn't protect you if your firm is not a member of the SIPC. It doesn't protect you on promises of investment performance, commodities or future contracts, or market loss. What's that mean? Well, if you decide to buy shares in X stock, and that stock drops by 50%, that's your problem, okay? That's not the firm's problem. That's not the SIPC's problem, okay? Also, if you buy pig bellies, okay, or coffee or cocoa, or you're buying futures on some of the aforementioned commodities or currencies, that doesn't apply either, okay? In order to find out, this is important, right? In order to find out if your brokerage firm is an SIPC member, again, go to their website, SIPC.org, and there's actually a link where you can check the list to make sure that your firm indeed is a member firm. Now, you might ask, wait a second. Hey, Katzman, you don't think about $500,000, right? There's a lot of people in the world, right? Let's say like, I don't know, Elon Musk or Bill Gates, right? What are they going to do with $500,000? Well, there are not enough firms, there are not enough brokerage firms to spread out $500,000 to make sure that they're covered, that they're protected by the SIPC. What are they going to do? So it's important to know that it's sort of on a firm by firm basis, but most brokerage firms, reputable firms for sure, carry additional insurance. Sometimes though, I saw once a statement that said they were protected up to $1 billion, or some are protected up to $99 million, whatever it is. Each firm has its own policy. Other firms, just like ours, or I'm gonna read from the website. It says client accounts are carried by a clearing firm, Pershing LLC, a subsidiary of the Bank of New York Mellon Corporation, one of the oldest continuously operating financial institutions in the world. Securities in our cornerstone account are covered by a combination of the SIPC and additional insurance policy through a major carrier up to the total net equity value of your account. Okay, so in summary, because I think it's important, when you open up a brokerage account in the United States, you want to make sure that the firm you're working with is a member SIPC firm. How do you find that out? You go to their website, sipc.org. Again, I've said that I'm getting royalties from the SIPC. They'd be really happy with. Why do we get this surge in traffic on our website all of a sudden? Anyway, it's up to $500,000 of securities and cash, up to $250,000 of the cash, as we read. Also, and for those of you who are fortunate enough to have above that said sum of $500,000, you want to check with your firm. But again, most reputable firms all carry some form of insurance from major carriers, insuring, like I said, could be up to $1 billion, up to $100 million, or the whole net equity value of your portfolio, like we do. Okay, so I hope that puts your mind at ease. And if it doesn't put your mind at ease because you're like, wait a second, the firm I'm with isn't a member of the SIPC, I would maybe think at least about maybe moving your account to a firm that is a member firm, because that's important. It's an added level of security to help you sleep well at night, right? It's enough to know that there's volatility in the stock market. You don't need to know that your money may be at risk because you're with some kind of firm that isn't a member firm, and if they fail, your money fails along with them. You don't want that, right? You want to protect your money. That's one of the the tenets of investing. We want to know that the infrastructure, at least, is sound infrastructure. What goes on that infrastructure, what goes on that highway, right? That's already could be your problem, right? If you pick the wrong things, then, as we say, sorry. But it shouldn't be that. You shouldn't have that issue. You invest reasonably, good quality investment which matches your goals and needs. You should do just fine over time, and you should sleep well at night knowing that your money has protections against the brokerage firm you're with failing. I hope that helps. We're going to attach a link in the comment section as well to the SIPC so that you can go ahead and spend some time there and really understand, get a feeling for what it really means to have this protection. But in this day and age, where there have been some frauds and, again, downgrades of banks, bank failures, I'm just telling from personal experience, I get calls all the time. And in fact, I got one recently. That's what spurred me into action to do to film this podcast and this video. So thanks so much for tuning in. You've been tuning into the Aaron Katzman Show, where we speak to you about your life, your money, and your investments. If you like this, please hit the like button below. And if you've not yet done so, please subscribe to both our YouTube channel and to the podcast. Thanks so much for tuning in, and we'll speak to you soon.